everybody, this is Wendy Berry with Coldwell Banker here in Orange. I am with my good friend Jenn with Guaranteed Rate, Affinity, mortgage lenders. And I had Jenn in today so that we could talk a little bit about mortgage rates, things that could help my clients and anybody out there feel comfortable with the lending process, with what's going on with interest rates, what's happening in the interest rate world. And Jenn can explain a lot of this for us. And I'm going to let Jenn introduce herself, explain what Guaranteed Rate is, who they are, and how they work with Coldwell Banker. And they work with us very well. We love GRA. And just a little bit about herself and what she does. And then I'm going to ask her some questions to help you guys out.
Awesome. Thanks, Wendy. So, my name is Jennifer Newsome. I am with Guaranteed Rate Affinity. We are a sister company to Coldwell Banker. So we work side by side with them day in and day out. We have the same parent, so to say. I am a mortgage loan officer. I have been a loan officer for almost 25 years. Prior to that, I was a real estate paralegal.
She was a baby when she started.
Yes. Just born. Yeah. Prior to that, I was a real estate paralegal. So numbers are my thing. I love numbers. I love making sure people have the correct numbers. And if there's anything that's most important with a closing, it's knowing what your numbers are going to be, what you're going to need for your down payment, what you're going to need for your closing costs. I feel there's nothing more important than making sure the client knows those numbers ahead of time, so there's no surprises. So. And
that is those are the questions that my clients ask all the time. Yeah. What are my closing costs going to be? What are my down payment? What's my down payment? What are all those costs going to be? And Jenn gives those to my clients. I'm always comfortable that they're going to know them right up front once they talk to Jenn. So it's always comforting.
Yeah, it's very important. I mean, you want to know what you're going to need. The surprises the day before closing. I only want good surprises, like somebody gave you a nice gift or something like that. I don't want any surprises that you don't know what.
Not a monetary gift that we weren't prepared for. We'll talk about that a little bit.
We'll touch on that. On your table of your new home.
Yeah.
Yes.
So there's been a lot going on in the world of interest rates and finance these days. But something good happened last week, and this kind of prompted me to want to talk to Jenn this week. We had a 0.5% rate drop last Thursday. So I don't know if people know about this. I don't know how many of you know about this. But what happened and what does this mean and what do you see for the future? Not that Jenn is a fortune teller or can, predict anything, but we can get some good guesses.
Yes, absolutely. So there's a lot of things that play into the market and, the stocks, the bonds, the interest rates. And it's really hard to break any one thing down, what is going to make rates go up or down. But some indicators came out in the middle of last week that made interest rates come down, which we love. If you're in the market to buy a house, it's good news. So they did go down about 0.5% between 2 days last week. So we were, a little over 7, and now we're in the mid 6s, which is actually huge if you think about it. If you start projecting some numbers out and you start running some payments, that's a big drop. The general consensus, the general feel is that we should see rates improve going into the spring, between now and the spring. So, hopefully this is the start of something new. This will definitely help buyers, with their payments.
Yeah, and especially in that spring market where hopefully we'll get more inventory into the market. Yeah. People tend to like to, prepare and put their houses on the market come spring. So between now, where last week, I just have some numbers here jotted down, we were at, say, 7.25%, and with that 0.5%, just so you understand what that meant, it went down to about 6.625%, and that would have been a savings of about $137 in a mortgage payment. Yeah. So that's pretty darn good.
Yeah, depending on what that mortgage loan amount is. Yeah, but that's about the average. Just with that small of a change in an interest rate. Absolutely.
Yeah. And exactly depending on the mortgage amount. But so that is pretty good. So there's a lot of different ways that you can approach a mortgage, and there's different approaches for different situations, and and I've been talking to a lot of clients who need to move or want to move or make that purchase, and they're tired of waiting, and they were tired of getting beat out for every offer they put on a house last year. And, because they were competing against 10 people, it slowed down a little bit. Home prices are normalizing a little bit. We're not seeing those crazy, 40,000, 30,000, 20,000 over asking price, offers. These days they are there. They're just fewer and farther between. So, people are ready to buy and still willing to buy and more able to buy. Offers are getting accepted now, especially if you write them properly, not properly, if you write them well and know some things that can get them accepted. But the mortgage rates have been scaring some people. So Jen, what are some ways that people can maybe do a little bit better on their mortgages?
Yeah, absolutely. So we've been doing a little bit of creative financing, and there's nothing, illegal. There's nothing wrong with it. It's just creative. And everybody's situation is going to be a little bit different. So it's really important that you have a loan officer who's going to spend the time figuring out what your end goal is. And having that loan officer know what options are out there. Some of the things we have been working with lately, since the market has shifted a little bit and the rates have come up a little bit, is people paying points to buy down their interest rate. So instead of, as an example, the rate is, and this is just an example, say the rate is 7% with no points and 1 point equals 1% of your loan amount, you could potentially buy that rate down by paying 1 point, that 1%, and buying down that rate by maybe 3/8 to 0.5% on the rate, which is going to make your payment obviously lower every month. So I always refer to it as a pay now, pay later sort of thing. So you're paying a chunk of money now or at closing to buy down that rate, so every month your payment is a little bit less. Another thing we've been throwing out there lately, and it's kind of funny because I did these about 15 years ago, were buy downs. So we have a 2-1 buy down and a 1-1 buy down. And we actually have a half a year buy down as well. So the premise of this is that you buy your rate down for a short term. So on a 2-1, you'd buy the rate down for the first 2 years. And there, you're supplementing that, with, potentially a seller credit. So you're making the payment based on, say, a 5% interest rate if your actual note rate was 7%. And your seller, if you can, work this into your contract, which Wendy can help you with, is going to pick up the difference in that payment as a seller credit. So for the first year, your payment is based on a rate of 2% less than your rate. And then on the second year, your payment is based on the 1% less on the rate. So it helps you out for those first couple years.
And whatever that cost is the credit you're asking for.
Right. The difference. Yeah. Yep. So you make the payment, the money that the seller's giving you a credit for, goes into an escrow account, and every month those two amounts go together to make up your full payment.
Yeah. It's one way of doing it.
Right.
You
it's
can pay
all
yourself.
You can pay it yourself as well. But it's all in whatever your situation is. I think one of the thoughts right now is that rates are rumored to come down next year. So, you know what, if you can get your payment a little bit lower in the meantime, why not do that? And then when rates come down, you can refinance. Yeah. So you're getting into that house now before before the prices go up, which they usually do in the spring. And there's such demand out there right now. Prices are probably going to push up again in the spring. So why not get into that house before those prices push up and refinance down the road?
Oh, sorry. Yeah, we're here. We're staying on the call.
So just a couple ideas, but it's really important that your loan officer runs these scenarios for you, because one might not fit everybody's scenario. If you're only staying in the house for 2 years, paying the point to buy the rate down might not be the best idea. So it's really important that you know all the facts and run the numbers.
Yeah, and that's why it's important to work with a really good loan officer who can weigh all of the situation. It's very situational. What your situation is depends on the type of loan that you might want to use and the type of program, whether you buy it down, whether you pay points, whether you, buy down, like I said, buy down the rate. So, it's really important to work with a good team. And as I tell my buyer clients all the time, I recommend, unless they come to me with a great lender that they love, and that happens often, but oftentimes people ask me for a recommendation, and I have a couple that I go to, and Jen's top of my list. And I always say, and people ask me, no, I don't get anything from Jenn. That would be illegal. But I like working with somebody who knows their stuff, has a lot of options for my clients, and can get the job done, and get it done the best way for my client. So I know Jenn can do that, and has, a lot of tricks up her sleeve, so to speak. So working with the right team of people, your lender, the attorney, anyone involved. Sometimes we have to bring in trades. Having all the right team members to get us to the finish line is hugely important. So understanding everything that goes into your loan and all of your options is important, which is why we did this today. Trying to think of some of the other questions my clients come to me with.
You had mentioned that sometimes people come to you with a lender who is a good lender who, the people like. I always say there's nothing wrong with getting a second opinion.
Yeah.
Just run those numbers. And I am going to be brutally honest with you. If you come to me for a second opinion, if somebody has this amazing rate, I'm going to say, you know what, you need to lock that rate right now because that's an amazing rate. You need to run with that. I'm here if you ever have questions, but you need to run with that rate. Or I'm going to say, did they tell you that you have these points on here? Let's discuss this. Let's try to figure out what they're doing. And let's compare apples to apples. At the end of the day, I'm going to advise you what's best for you. It's not all about me. It's about you, and it's about making sure you're happy. So always look for that second opinion on the rates and just more information. If you're not getting all your questions answered, reach out. Ask Wendy for another name to call.
So that's that. Hope you found this helpful. I'm going to leave Jenn's contact information at the end of this and how you can reach her. There will be links below for reaching out to Jenn. She's got a great website, great tools for you to use if you want to check, mortgage rates and get pre-qualified.
Yeah, there's a really nice first home buyer. There we go. Link on my website. It's you can download it. You can print it if you want to, but there's tons of information there for first time home buyers. Also for repeat buyers. If you want to refresh your memory on the whole process, jump
Things
on
have
there.
Changed.
Yeah, you'll see the link from my website. Jump on there and take a peek.
Yep. So you'll see that down below, and follow, and we will talk to you soon. If you have any questions, give me a call. My contact information is there as well. Thanks, everybody.
Thank you.
Have
Take
a good
care.
week. Bye.
Be well.